More on the story of why not to be the landlord. Stay tuned. That's right. We're back just like we are every single Wednesday at 11:05 Central Time here for NoteSchool TV. I wanted to be the first person to say welcome. Welcome to the channel. Welcome to the show. Glad you're here. Make sure that you say hello in the comment section in the chat box. If you're watching on YouTube or Facebook or wherever you're at, we'd love to hear from you. This is a great place to interact with us. Bring your questions. Get engaged in the conversation. And let's start working on taking that next steps. As this video kind of unfolds with our fantastic guest today, you're going to see some pretty cool stuff. And if this is valuable, I'd love for you to take a second and just like the video. It means a lot to us. And it's something that I think kind of gives us more feedback of, hey, this is some more stuff we should talk about. And if it's valuable content for your business, it's something you should be subscribing to. So just click that subscribe button, click the bell notification, especially for this show, so that you're getting the latest, the greatest information. You're getting alerts when it comes out, and you'll be notified when we go live. It'll actually pop up an alert saying, hey, we're live. Jump on, join us, say hello, right? So hello to everybody. I appreciate the heads up from some of our friends. If you're new to Notes, you're new to NoteSchool maybe, and you're trying to figure out what that next step is, go check out this link right here, noteschool.com/TV, to learn a little bit more about how you can either get involved, right, learn a little bit more, or take that next step on your notes journey. So we've got a very fantastic show. And afterwards, as always, we're going to stick around and just hang out with our guests, kind of shoot the breeze and answer questions that you guys have, and simply join the after party. You have to do nothing but stay on the show, right? So if you can stick around, we'd love for you to join us. For the rest of you guys, we'll plan on seeing you the next time. But before we get into too much and bring on our guest, Casey, I really want to bring on my good buddy, Joe, to talk about the news. Well, Mr. Varnador, how you doing?
How are you, sir?
I'm good as always.
Hello,
I'm good as always.
Here, so let me get on the news here. So, everything going well, Brian?
Oh yeah, absolutely. I'm always curious to see what's going on in the market. The more the pressure builds, the more excited I get. So, what's going on today?
Well, there you go. So, first article this morning is from Housing Wire, right? And it's entitled "How Appraisers Value Homes in a Hot Housing Market," right? So this starts out with a realtor in Seattle, Robin Sheridan, real estate broker. She says she recently listed a 3-bedroom home in Seattle for $795,000. 76-year-old brick home had what she considered a funky layout with 2 rooms added to the back, which kind of messed up the flow, but still they functioned, right? So Sheridan had the appraiser appraised the house for $795,000. She listed it. She received 29 offers on the property within 5 days, and it sold for $1.013 million, or 27.4% over the list price. So,
wow.
To put it mildly, and a lot of interesting article. How do appraisers? They just put a number on it and let the market dictate the price. Does that make sense, Brian?
No, it really doesn't. But okay.
But sometimes as they say, buddy, it is what it is, right?
That's just it. That's just it. I mean, they're so used to looking at previous data, but some of the incoming new fresh data is going to be so outrageous compared to the past that you're kind of in this bind, and you've got to be able to come up with a solution. Well,
I mean, a listing, an old listing now is 60 days old.
Yeah.
With prices going up the way they are.
Yeah.
So our next article this morning is April housing starts drop 13.4% from March, right? Supply chain constraints continue to handcuff builders. So again, it's that thing we've been talking about. Skyrocketing prices for lumber, appliances, and other building materials continue to handcuff new housing starts all over the country. So basically, 1.045 million in April, which was about the way it was at 1.04 in March. And this is just proof that builders are delaying housing starts and the marked increase in costs for lumber and other materials, said Mike Frantoni from the Mortgage Bankers Association. Guys, it's holding back the market, and says even with these challenges, there are roughly 640,000 new houses under construction. You look at that and you go, okay, 640,000 houses, but if we remember the news piece we had a couple of weeks ago, we're short almost 5 million houses in the United States as far as inventory goes. So again, all of this stuff has continued to add up from the pandemic, and it's catching up, right?
Yep.
And then, guys, Brian, this was a few years ago, but this is back. Fannie Mae announces sale of non-performing loans. This came out last Friday, and NPL 2021-1 includes the company's 17th community impact pool. Fannie Mae announced its latest sale of non-performing loans. The interesting thing, Brian, is that this really never stopped. It just has continued to move forward, not at the rate that it was, 5 years ago, right? But it is still there. The 4 larger pools include approximately 8,090 non-performing loans, 1.6 billion unpaid balance, and then there was a community impact pool of approximately 400 notes, totaling 98 million, and most of those are from the Miami-Dade area, right? So again, this is what's happening, and bids are due on January 8th. Or June 8th. Here's the thing. This is just as these pools come into market, you have the larger hedge funds buy, and they'll buy them all, and then they'll just kind of, it's a trickle down effect, and we'll see more and more and more of these. So, Eddie and all of us at NoteSchool have been talking about this for the last year, and we're seeing this come down the pike. So pretty interesting stuff. And again, guys, we are on top of it, right? Eddie is sitting right at the top of the mountain, right? So finally, and Eddie, why don't you jump on and kind of talk through this a minute. So this came out this morning. Stocks, Bitcoin drop in broad retreat from riskier assets. So U.S. stock dropped alongside commodities, overseas shares, and Bitcoin on Wednesday as investors' risk appetite diminished, right?
Well, I'm not a Bitcoin expert. I know people claim to be, and maybe they are. But I think this is a great example of what we see on the real estate side, Joe, and that is there's a headline and people react to the headline.
That's right.
And so, I don't know, I know a lot of smart people that think Bitcoin's a great thing and stuff. I would say anytime you see some outrageous run up, you can kind of know there's some air in that, right, Brian? Little air in that deal.
Yeah, absolutely. I mean, anytime you have that much pressure up, if something goes up too fast, it's going to have to come down just as fast, right? In anything.
Oh, wait a minute. Are you talking about residential real estate?
It's like I'm hinting at it. Mm-hmm. Mm-hmm.
I'm just saying.
Yeah.
All right. Well, the trees.
Well, this didn't, folks, we know, Eddie, that folks read the headline, right? So they read the headlines. They may not have any money in the markets or Bitcoin, but buddy, they sure read that and go, "Oh my God!" And then they look for safer. If there wasn't already a record number of dollars in dry cash sitting in the market in accounts, then this will increase that a bit.
Next week, we're going to talk about all that a lot.
That's right. That's absolutely right. And I think today, I think our guest is going to be able to kind of, this is actually a great segue because I think you're going to hear a story today of why, or how rather, as investors, we can start to remove some of that risk from the marketplace and start or I'd say continue our wealth journey, but also just remove the risk piece, so we don't have to do this high up, high down, kind of thing. So, who do we got today? Joe, you want to bring on Casey?
We are honored to have a young lady from Pittsburgh, Pennsylvania, Miss Casey Brandy, and Casey is one part of a mother-daughter team, and feel free, Casey. We want you to talk about your mother as well as we're in here, and because I know she's kind of an integral part in what you guys do. So, good morning.
Good morning.
So, yeah. Go ahead. Tell us a little bit about yourself and what you and your mom have been doing. It's a great story.
Yeah. So my mom isn't here, but she's kind of like a Martha Speed. She'll do a lot behind the scenes, but she's really important. My mom was a MICU nurse for like 25 years, and she was just tired of her job. And I was in the middle of college, and I could just see things like falling apart. So we started back in the 08s, like 09s. And that's how we built our rental portfolio at the time. She cashed out her retirement fund, and we just started buying properties.
So Casey, you had 40 rental properties, right?
Yep.
Plus, what else did you have? A management?
oh yeah. That was another brilliant move, to start managing other people's properties.
Your headaches weren't big enough, were they, Casey? You had to
No. I was like, this isn't too bad. Let's take on some more without buying them. So
having 40 houses to manage, or of your own, and then an additional 200 of other people's. How was that?
I mean, you see these like gray hairs, It was rough. It was really rough, and it didn't last very long for me. I wanted out.
Well, let me say this. I think a lot of you and your mom, Colleen, and so we got to know each other really well because you came to a lot of classes. You remember, but you kept coming back to classes. So we got to know each other well. And you entered the rental market at the right time. I mean, your timing was perfect. And I think when you started coming to Note School, we started talking about another timing of the market.
Yeah.
And that was how to go really scale your business from having landlord property that thankfully went way up in value and you had a lot of equity in it. Mm-hmm. And then how to go reposition that and then go take that equity and then finance it over time. So what caused that decision? What got you to that point?
I just wanted off of the hamster wheel. Like, I wanted to use our money to work smarter for us, and buying more rentals was just not smarter for us. It just didn't work.
So you've gone from 40 rentals, right? And over the last several months, a year or so or more, you guys you've sold some of those. So you've sold 11 or 12 of those properties?
Mm-hmm. Yeah.
And what did that look like? I know you got some advice from Mr. Speed on a deal lab on a lot of these. So what was your thought process there?
Well, I thought I could use all this new knowledge to note my way out of selling them, but when I consulted with my board of directors, which is what Note School really is, that wasn't the best idea for the market that I'm in. It was just to sell outright, and that was really easy.
Well, and once again, what we're talking about is the assets that you had were more valuable to go cash it out and then take that cash and go buy notes.
Yeah.
Than it was just to note yourself out of it. So I remember in the deal labs, we would talk about the perfect note, the note creation property, and you weren't describing the perfect note property to me.
No, they were desirable properties in desirable areas. They weren't, crappy ones. And yeah.
Well, I mean, we're not saying those are what we want to note out, right? But
It just,
these were properties that these are properties that there was a market fever for.
Yeah.
And you had now been in note school long enough, you knew you could take that cash and reinvest it in some really good stuff that would have a good long-term income. So people always think that note strategies are always going to work in every scenario, but that's not necessarily true. And so what I think was great about you guys' story is while you were willing to work hard, you realized you could own a lot more assets and scale a lot more on the note side than you could on the rental side.
Absolutely.
So Casey, what did you guys do with the management company? You guys sold it shortly after you joined Note School, right?
Yeah, we did. It
What
really
was that smile that came on her face there when she said she sold it?
Yeah, I was already on the fence about it, and then Note School just pushed me right over.
Right.
Get rid of it.
And so you were saying to begin with, and you know, you called it right. You were able to buy some great houses when in the last market, right, in the last big deal, right, the Great Recession, and then you held on to those. So they did what they were supposed, what you really wanted them to do.
Absolutely.
But so what led up to that was just all of this other, right, the moratoriums, and tell us a little bit about that. Kind of the last straw.
Yeah. The last straw is usually, for most landlords, I feel like it's the maintenance. You know, when you've had a year where you've replaced like 7 gas lines and 3 roofs, you're just usually like, I'm done. You know, normally the tenants can help cash flow some of those repairs, but with this moratorium, people could choose whether they wanted to pay or not. And if you didn't have enough in reserve, you know, you were really hurting. So I was just tired of managing something I didn't feel I had a lot of control over. Like, I can't control moratoriums. You know what I mean?
Can't control anything around you, but boy, when I tell you, when you start selling those and you see that cash coming back in, and then you can put that cash into notes, and then you start building, you know, that B word that we like to talk about, right? Building your own bank. So
yeah.
So what does that look like today? Are you still selling properties, or what are you doing?
Yeah, I'm selling them as they become problematic for me. You know, if they're a headache to manage, I don't want them anymore. And I can make that decision because I don't think most landlords would sell today, even if they were in a position like mine, if they didn't know how to create a new monthly cash flow that notes give you. Like, you can't just sell something and sit on this cash. You have to keep it moving, keep it generating. And I have that. I know that I can go buy notes and keep it generating more cash flow.
How do you expand on that just a little bit? What she just said there, to take that cash out of one asset that is way up here now, and then you can go and anyway, go ahead.
Well, I think the real goal with anybody that does this is, you know, the rental thing is essentially a job. And even though you know, when you think, well, you had a management company and you manage rentals for other people, it wasn't labor free on their behalf, right? Anytime you had expenses or had issues, you really were looking to them to make executive decisions that you, at the manager, would then implement, right, Casey?
Yeah, and most of the time, no matter how well I laid out the decisions they had to make, they weren't comfortable making them.
Correct.
You know, so they had to rely on my experience to kind of guide them a little bit, and it still didn't end up very well.
And somehow they just did not like those invoices, did they?
Never, ever.
So you move from a business that has some invoices, some unexpected invoices, and a lot more work, to buying a note, which turns out to be pretty doggone passive for you.
Yeah. Right.
And so this is a transition. And look, we're fully acknowledging we're in a real estate boom, and the lift in the market's been really good to you. You know, I think it's interesting. Like, there's lots of perspectives out there, like, are the trees going to grow to the sky and all that stuff, right?
I believe in cycles, you know, and if you're listening to someone in real estate right now who hasn't lived through a couple of cycles, they just don't know what they're talking about. You know?
Yeah, well, I don't know that I know what I'm talking about, but I have lived through several cycles.
You know, Casey, about a little over a year ago, you probably remember this when Eddie came out and said, you know, it's right about now is the time when, you know, the advice of a gray hair guy or two might be helpful for the next, you know, year, 2 years, 3 years, whatever it looks like, right?
Yep, I just cover mine up, but yes.
So, Casey, I want to talk about something far more important than investing in deals.
Okay.
And that is, what's your real passion?
I like traveling, and I like skiing a lot.
Awesome. And you got a family?
I do. I have a husband and 2 kids under 5.
Awesome. So I guess the big thing, and I know you've heard me mention it, that's why I kind of brought it up, is you feel like these decisions are letting you make bigger decisions about what wakes you up in the morning.
Yeah. Yeah.
Right?
I don't feel tied or weighed down anymore. Like, I know I can transition us into something more aligned with what we want.
Yeah. So I think a lot of people like, why do we do this? And I love the note business. And I think all 3 of us really do.
Yeah.
But what I really love is what the note business does for us. I mean, it's not that I don't have a passion for the business, but the note business, the freedom of the note business and the flexibility of the note business is really a thing, right?
Yeah.
Because the rental property is a grind. It is just going to be a grind. Is that right, Casey?
Yeah, I can't emphasize that enough. And, you know, if you have 1 or 2 and you're happy with that, then you just don't have enough. You know, somebody will you'll hit your threshold. You know what I mean? Some people it's 5. For us, it was 40. You know what I mean? And you're just had enough.
Just keep going until you hit your threshold. Is that what you're saying?
That's what'll happen. Yeah.
Yeah.
Don't stop till you get enough, right? And you'll know when you get enough, right? I think that was a song a few years ago. Casey, here's the thing that you know I take from this as well is that when you're a landlord, right? And even if you know, saying you weren't in the management business as well, but even if you're just a landlord with 40 houses and you have a management company, it's kind of hard to go wherever you want to go and ski. And worry about what's happening back there. You're still going to get the calls versus when you're investing in a note, it can be anywhere. It's typically going to be serviced by it's always going to be serviced by a third party. And basically you just check your account and, you know, the money's wired in there and you don't have any other expenses. You know, that I think, is that your definition of freedom, Casey?
Yeah. It really, it's not hands off. You still have to pay attention, but it's a lot easier.
Yeah. Great story. Casey, I know that we want you to, I know you're going to be in the after party and stuff. In fact, I had a guy asking some questions about converting to landlords. Now, let me say a word of encouragement to you. Okay. I know that you're chipping off your inventory. That doesn't mean that you're not going to sell or finance some of your inventory. You have shown me some specific properties with specific stories related to them that we said, no, in that scenario, it's probably better to sell it. Just call it a bigger fool in the market, right?
Yes.
And it's better to sell it and then to try to keep it as collateral for long term. So that had a lot to do with some of the decisions. So I don't want anybody to generically think we always say sell for cash and don't own or finance.
Right.
And so I just wanted to kind of go back and talk about that. I know in the after party, we've got a good question from a guy asking about, you know, like risk as the lender and risk as the landlord. What you've talked about today, I think was really critical, which was freedom.
Yeah.
Which was owning a note is just a lot less of a job than owning a rental property. Is that fairly simple?
Yeah.
And Casey, that allows you, as you said here, we talked the other day, and so Eddie, she really wants to ski year round. So she wants to be on the other side of the world when it's the summertime here, so she can ski there, right? And then when it's winter here, she'll be here so she can ski here. So
I like that.
Saying, right? That's not a bad place to be, dear.
We've had a number of students that travel abroad a lot. And for that very reason. In fact, we had one on a deal lab with us yesterday, Joe, that was spends several months out of the year in another country. He has family in other countries and all that. So I do like that freedom. Casey, your story is inspiring to a lot of people, you and your mom. And then obviously you're a stay-at-home mom with your kids, and this is allowing you to be a lot more stay-at-home.
Yeah.
So there's a lot of people that listen to that and say, "Hey, I'd like to figure out how to be more of that than maybe what you are." So you're an inspiration, and you're a pleasant face. Thank you. It's great to see you. Enjoyed so much getting to know your mom and you so well. So,
well, Pauline, or Casey, it's also allowed your mother to be a grandmother too. Right.
It really does. It really does. She's not managing contractors. She's the one that goes to court when we have evictions, so she doesn't have to do that as much. So yeah.
I'm sure she's watching this morning.
She is. She is.
Yeah. All right. So Casey, stick around, and Brian, why don't you come on and talk about our sponsor and Feeding Frenzy Friday.
Well, the music gets me every time. Yes, our sponsor is Notes Direct and Feeding Frenzy. And each week we have a YouTube playlist where we break down on the Feeding Frenzy Friday playlist. We break a note down from Notes Direct. We took a note off and we break down the details of it, really to help you better understand what's going on with that opportunity, help you better understand the due diligence level, build your confidence to help you better understand if this note is for you. And if it is, hey, you can pull the trigger, click the buy button, and purchase a note as easy as you could buy something on Amazon or another website, right? So we try to make it simplistic, and that's a great place to go if you're wanting to kind of learn a little bit more, right? Notes Direct is obviously a great sponsor because they have access to inventory. If you're looking for notes, it's the place to go. Next week, we have one of my favorite parts of the whole month is going to be Eddie's note industry update. We get to hear from Eddie as he gathers kind of the data and puts it into a formula for us to understand and really help educate ourselves a little bit more on what maybe we should be doing in this marketplace, how we can continue to grow our wealth, increase our returns, but reduce a lot of our risks, right? And so thanks everybody so much for joining the show. We're not 100% done, but we are close. We're going to be sticking around for the after party in a minute. As always, it's a live show, so definitely interact with us. We're here every Wednesday at 11:05 Central Time, so make sure you're jumping on board. If this is interesting to you, if this is something that you're like, I need to learn a little bit more about that, let me give you a couple options. One, we'd love for you to like the video. It tells us this is more content we should put out. You should subscribe to the channel. That way you're getting it in your feed. You're getting more of the videos that we're putting on. As always, especially for this show, click that bell. Click the bell, just make the notifications happen. That way you'll be alerted when we go live. You can jump on. You can always go to noteschool.com/TV to learn a little bit more, if that's for you. Or if you're somebody who's like typing in 15 questions right now, I'm so glad that you are, because you have that burning desire to succeed and take action. And if you need some help right this second, go to noteschool.com. There's a contact us tab. Just simply click it, fill out your information, and we'll get right back in touch with you. We'll help you figure out what that next step is going to look like for you. So for everybody who was able to join us today, we appreciate it. If you can't stick around, we'll see you on the other side. If you can, we'll see you in the after party. All right, Casey, thanks so much for hanging out with us today. Always a pleasure. And what's really cool too, I think that is great about your story is we're seeing in the comments so many things of really kind of, it's your traditional investor asking questions because they're like being introduced to it, right? And what's so fascinating, I think, for a lot of investors is rental properties is a great solution on paper. Like, it sounds like a great thing. And in certain, as Eddie said earlier, in certain parts of the market cycle, it's a really great thing. But when you don't have anything other than a hammer, everything looks like a nail, right? And so some of the questions that we saw coming in are, can Casey give some other reasons aside from time of why she's selling? And some of the things that you pointed out, if you'd like to expound on this, feel free. But it's literally just, it's the headache piece, right? It's the tenants and the toilets and the turnover, right?
I mean, I'll put some numbers to it. If you have like a rental and it's generating $300 a month in cash flow, and one of the units I just had to put in a furnace and it cost me $3,600, that's 3 years of your cash flow just wiped out.
Yeah.
That's what most people don't calculate, is what the net income is if you sell or finance versus the net income if you do a note. Once again, this is a deeper, longer story of the assets that she sold for cash. We ran an analysis. There's not an automatic answer, right, Casey?
No, there isn't. I mean, you can go into the archives and see the deals if you want and see how he came to that conclusion.
Well, that our NoteSchool members can. Not every.
You're right. I'm sorry.
But we talk about those kind of things in training a lot, so somebody can have access to talk about it. But definitely that's the case. But just let me say, generally speaking, if you have an asset that nets you $300 in income as a rental, I'll almost bet my best pair of Texas Cowboy boots that it's going to rent you close to about $600 in a seller finance story. You find that to be true, Casey?
I do.
Yeah.
I do.
So understand, that's why that's a great reason and a great question. Why would you do it? It's pretty simple. It's just it's more money.
Yeah. And I think that we've said it before on the show, but when people look at real estate, there's the good pieces that they want, and they just deal with the bad in order to get the good. And what the note industry has opened up for investors is that you can keep all the good, but take away all of the bad. And if you knew that at the beginning, right, when you got into this, it's probably the direction most people would start, but people just didn't know, right? And so it's kind of cool to see, because I'm in the same boat, right? I was buying rental properties and I did not have the positive experience. I was actually the optimist who was like, no, I just had a bad experience on that one. The next one will be better. The next one will be better. And anyway, after I bought several, it just didn't get
better.
better.
Strategy, Brian, right?
Yeah. What's the old thing, Brian? How's that working for you?
Yeah. Let's just say I don't own any rental properties anymore.
All right. So Justin had a great question, and that is, it's a risk question. And he's saying, like, well, if you're a landlord and I get it, holding a note seems better, but if I hold a note and they go in default, they're not paying, it's 120 days delinquency, right? So, Justin, let me say this. A lot of people that talk about seller financing are doing what I call a substandard form of seller financing.
Right.
My passion, my footprint that I want to be credited for is I was for the good of smart seller financing. The guys that we're seller financing are putting significant down payments, call it 10 to 20% down. And these are people that, because of the void in the credit market, they could have traditionally gotten a conventional mortgage, or they're self-employed and maybe. Because let me just tell you something, Fannie Mae is not real wild about financing somebody self-employed or somebody on commission today. Saying they're not real wild as in it's almost impossible. I don't want to say impossible, but it's getting close. It's getting there. Yes. And so understand, Justin, that when you're looking at delinquency, I'm saying lend to somebody that will pay you back. And the market has opened up a huge opportunity for people that need that gap filled. You are probably technically correct. If they go in default, then yes, you got to go through a foreclosure action. But the smarter you lend, the less you have to worry about that. Don't start out with a loan to own scenario, right? And once again, that may not relate to exactly how you're thinking, Justin, but you ask, like, this is what people are always worried about. Like, like, what's the default situation? Well, the default situation, if underwritten and sold to the right people, it's a low percentage shot. It's not an impossible shot, but it's a low percentage shot. Great question there.
Good question. Very good question.
Yeah. Absolutely. And one of the other ones that, and we kind of get this every now and then, I think it's important to just address every now and then too, is Tyrone asked, where can I purchase more notes? I'm an investor looking nationwide. And the thing is, first of all, our sponsor, Notes Direct, is a great place to go. For those of you who are newer to Note School, if you go to NoteSchool TV, we've got a little training there, but I also teach a one-day class where we talk a little bit more about this, how we can acquire some more notes, what are some places, we even get into talking a little bit about the marketing, who we're marketing to and what that might look like.
Right.
And so if that's of interest to you, you could always go to noteschool.com/virtual gold and register for that one-day class. So there's a couple of different options for you. And so if there's any other questions, feel free to chime in. But as they're kind of coming in, again, just want to kind of wrap up and say thank you so much, Casey, for joining us today. I think it's very beneficial to see not just somebody who's like, oh, yeah, I'm buying notes, or, oh, I'm a note investor, but someone who has done this side of the business, meaning that I've dealt with the sticks and the bricks. And in my experience, this is kind of what's happened. And I'm finding more benefits by considering these other things, right? I think that's really a powerful thing for a lot of people to hear right now, is that we're not saying, oh, this stuff doesn't work, you don't want to do that. It's literally, hey, you may want to consider looking at this other side, because the goal you're trying to accomplish may be easier to be met over here than the traditional ways, simply based on the market cycle. And when you've got somebody who's been in business for 40 years, they've seen a thing or two about some market cycles, and that knowledge, that wisdom comes in handy quite a bit. And
well said, Brian.
Yeah, I appreciate that. So, hey, thanks again for everybody who stuck around in the after party. It's always nice to see you. We'll continue to watch the question box and all that kind of stuff, and we'll try to get those answers for you. Otherwise, everybody, will see you next week on Wednesday at 11:05 Central Time here for Note School TV. Have a great week, great weekend. We'll see you on the other side.
Bye, everybody.
See you.